Okay, folks, welcome to Sunday Night Stock Market Futures Live. It's good to have you here, and we're going to go over, obviously, the futures. And first, we're going to go over the economic data that was released last week, what's coming out this week, because what we're looking for are catalysts to drive this market higher or possibly push it lower. So let's begin with hitting that like button, please. If you could do that, I'd really appreciate it. And subscribe to the channel. And let's get to the economic data that was released last week, which resulted in some volatility in the markets. We had non-farm payrolls, which came out considerably worse than expected. The markets had expected 165,000. Hey, Pat. Good to be up there. We missed by 20,000 jobs. The prior month's number, remember, that was influenced. It was a big beat, but it was influenced due to the GM workers' strike ending, and those workers came back to work. Average hourly earnings. And honestly, this is probably one of the reasons why we're going to see the markets bump up higher in the future. Short term, it was a negative. Longer term, it's going to be positive. Why? It's because nobody can afford higher interest rates. The average hourly earnings gives the Federal Reserve every opportunity they want to remain accommodative, because their obligation is to help support the jobs market and to influence average hourly earnings to the best of their ability. And if average hourly earnings are not skyrocketing, well, then there's no inflation at the wage level, and they could stay accommodative. So I don't think that the market's getting that short term. I think that the knee-jerk reaction by the market was negative. No shock. And that often happens. Earlier in the week, we had the ISM non-manufacturing index, which was released. That's services. And it came out with a number that was better than expected. Factory orders was a miss. Not a miss, I'm sorry. It was actually a beat. They expected a negative number, but we actually did less worse on factory orders. ADP, I believe that was a beat on ADP. And we had a drawdown in weekly jobless claims. But that non-farm payrolls number, that's a real serious number. I usually call it the Pimp Mac Daddy of all economic data. So that's what the market's traded off of. Let's see what's coming out this coming week. We have more Fed heads coming out. All these speeches that they give. We have the Consumer Price Index. This is going to be an interesting number. 8:30 a.m. Tuesday. That's inflation at the consumer level. The core CPI, they back out food and energy, as if that doesn't matter to us. The Producer Price Index, that comes out on Wednesday. So if we're seeing inflation at the producer level, the question will be, are producers passing along those costs to the consumer, or are they absorbing them? Remember that, I'll go to a chart in a moment, that valuations for the stock market are at all-time highs on a price-to-sales basis. So these companies really can't afford to take a hit to their earnings, because they're very, very, very expensive right now. We have later on in the week coming out retail sales. That should be interesting. Business inventories. And then to cap off the week, we have building permits, which is what I look at. That's a forward-looking indicator. And, of course, housing starts, industrial production, and consumer sentiment. So it's going to be a busy week in terms of economic data. So buckle up for volatility. But I'll stand behind what is generally the norm of late. And when I mean of late, for the past 10 odd years, bad news is generally good news. Why? The Federal Reserve is given license to remain very accommodative. That's bullish for stocks. So the technicals at the back half of the week, I already went over this with members on the week ahead commentary. The back half of the week on Friday, pretty much bearish. We had outside reversal days or bearish engulfings, and we may just get a pullback. Let's go to the futures action right now and see what's going on. We've given them a couple of minutes to settle down here now that we are 5 minutes into the new session. And members, we're going to be, Nikkei is taking off here. We're going to be going over at 7 p.m. Eastern Standard Time, a members private inner circle. So I'll go over any of your symbols that you want me to go over during that session, 7 p.m. Eastern Standard Time. All right, so this is the Nikkei 15-minute chart. Let's go to a 4-hour chart. All right, so the Nikkei is looking good here. A bit of a rough week, but we had a rebound on the back half of the week. We still like the Nikkei. And in all probability, let's go to a weekly chart. In all probability, yeah, we're going to go higher here. Here's your weekly pullback. And we are on the verge of flashing a continuation breakout on the heels of last week's bullish reversal and an outside reversal week. Very bullish stuff for the Nikkei. Let's check out the yen. And then we'll segue over and into the US dollar, because I want to see how that's behaving, and then we'll drift into commodities, and then we'll leave off with the stock market futures. All right, so here's the yen. It makes sense. Japan is an exporter, so a weaker yen is good for their exports, makes their exports cheaper. So weaker yen, Nikkei bullish. We had an outside reversal week, coincides exactly inversely of what you saw in the stock market. Let's go over to the US dollar. We'll go back to the 4-hour chart. We're still holding on to a 97 handle on the dollar. We closed off the highs of the week last week. The dollar took it on the chin due to the negative economic data that was released on Friday. Let's take a look at Bitcoin. Bitcoin is on the verge of a major breakout here. It's moving up now. And what we're looking at here, folks, is we booked profits last week on Bitcoin because we rallied up into resistance. And at current, we are trading above the upper band of resistance on a weekly basis. So I like to see a pullback and a retest of this breakout point, validating that what was resistance is now support, and then we'll put our toe back into the water with Bitcoin and look to open up a long trade. And it is looking really good as we proceed into the new trading week. Very, very good price action. When you take a look from the 3rd, when the Iranian events began to unfold, on the 3rd of January is when we killed the Iranian general. And you could see that the price of Bitcoin rallied along with gold, silver. So it is being perceived as a store of value. And it can't be ignored. I know there are economists out there that I respect a lot. And I respect their opinion on the macroeconomics. I respect their opinion on gold and silver. But I disagree with them that there isn't something to be said for cryptocurrencies. So I'm not one of those naysayers. I think that there is something there. Will Bitcoin ultimately be the overall winner? Who knows? It could change overnight. So right now, it is the Pimp Mac Daddy. It is the leader of the cryptocurrency arena. So this is what we want to trade because it's liquid. So Bitcoin looking very, very good. Let's take a look at gold. 4-hour basis. Now, I was impressed with, we're up at current. We're off the highs, though. I was impressed with the way that gold pulled back off the highs of the week, and it held support. I was hoping for, on Thursday, I was hoping for it to hold 1550. Hey, Method. Good evening to you, too. I was hoping for it to hold 1550. It held 1560. So while we have a big topping tail on top of the weekly candlestick, net, it's still a fairly bullish week. We did end up closing higher on the week. The same can't be said for the gold miners. We were back in. We were buying more gold miners. We sold into the euphoria early in the week, a small portion of our position of the NUGT. On Friday, we started buying the dip, and we'll look to add more in the coming week and weeks as we begin to stabilize and then begin to catch a bid. So more to come there. Let's check out yields. Let's go with the 10-year. I'm sorry, this is not yields. I apologize. This is the 10-year bond price, not the yield. So we are up on the 10-year bond price. That means there's pressure on yields. That's bullish for gold. So a good beginning to the new trading week here. And we may just break out by tomorrow morning. 4-hour chart here. So let's annotate this. And that didn't take. Okay. Edit. All right. I don't want to waste your time. We'll keep an eye on a breakout on 10-year bond price. Let's go to, let's check out the S&P futures. All right, so we have an inside bar so far this session. No new high, no new low versus the last 4-hour bar, which was on Friday. Looking at the let's go with the Russell 2000. Now the Russell 2000 hasn't broken out along with the rest of the stock market, the large caps. It's been a laggard of late. We're up at current, but this is a very sloppy chart on a 4-hour basis. So sloppy, in fact. I want to clean this up. And start anew. Because at some point in time, there's going to need to be a decision made as to whether or not we're going to get long of the Russell or whether it's time to get short. Now, looking at this 4-hour chart, what we have setting up here potentially on a 4-hour basis is a W formation. Is the left side of your W. Is your center or pivot point. We did break out last Wednesday, but we failed to hold the breakout on the W formation. And this could quite very well be setting up as an inverse head and shoulders setup. Left shoulder, head, right shoulder as well. So if we get a breakout above this upper band of resistance, we want to be looking to buy the Russell small caps. However, if we break this support level here, then we'd be putting in lower highs, and then we would have a confirmation breakdown on a 4-hour basis, and we'd be looking to get short of the Russell. let's take a look at, and I'll be using the TZA, which is a leveraged ETF, putting you short of the Russell 2000. Let's take a quick look at the NASDAQ 100. We're up smartly, another inside bar. We have not taken out the lows of Friday. So the question then becomes, do we hold the support level here? Do we rally? And do we take out the prior high? The test is always at the top. Do we break out or do we fail? Are we rejected and then do we roll over? Now, I've been predicting that in all probability in Q1 of 2020, we'll get a pullback in the markets. It's a pause that refreshes. It'll set us up for a rally into the elections, and that's exactly what they want. And we do have silly season beginning very, very soon. And silly season meaning earnings season, where everybody beats by a penny. Who gets that penny? Let's leave off with Nat Gas. We traded Nat Gas last week. Let's go to a weekly chart. We traded the UGAZ, and we booked profits on it. I'll be looking to get involved yet again. Let's do it again here. On Nat Gas. All right, so no new weekly high yet, no new weekly low. Let's take a look at a 4-hour chart. All right, so on a 4-hour basis, we got a little bit ahead of ourselves, rallying up and into the third standard deviation Bollinger Band. We're getting a pullback as the pause that refreshes. I think that in all probability, we'll be back involved again this week with Nat Gas. Here's that breakout. And this is what we're looking for with Bitcoin. Except Bitcoin on a weekly basis, we're looking for this. We have our breakout at current, right? Here. But we want to see it pull back and do a retest of the breakout point. Let's bring up Bitcoin. Here's the move higher. We want to see a pullback and a retest. We did it back here, but we failed to hold that breakout point. That was a test, but it failed the test. We want to see it tested yet again. Back to Nat Gas. We have a bunch of people. Folks, if I could ask you to please, if you could hit that like button, I'd really appreciate it. Thank you very much. Helps me with the YouTube algorithms. All right, so Nat Gas looking good despite the pullback here. It's a pause that refreshes. We're breaking out of a fairly sound consolidation. So numbers more to come with UGAZ. Now taking a look at the headlines as we proceed into the new trading week. This is off of Zero Hedge. With stocks the most valued in history, Goldman lists the 4 biggest risks. I'm not going to get too crazy here, but here's the chart that really, and Pat, you sent me a text earlier, sent us a text in that group chat about valuations. And the market could stay irrational far longer than we could remain solvent. So valuations could stay at nosebleed levels for a long time. I was trading back in the 1990s. I lived through the dot-com parabolic move higher. And in fact, I brought up a chart. We'll come back to this. I brought up a chart of the semis on a weekly basis this is from 1999 through to the dot-com bust. And this is what a bubble looks like. This was absolute insanity. it was on autopilot. If you couldn't make money in that market, you should never ever be trading, ever. It was that easy to make money. But when you take a look at the semis now, I mean, a tale of two time frames here, right? Dot-com bubble, present day. So hardly in the semi space do we have any type of a bubble that's created, been formed. Let's take a look at the S&P 500. Same time frame. Let's overlay present day, weekly view. Here was the peak. We are extended beyond the 50-period moving average by 1, 2, 3, 4, 5, 6, going into 7 bars extended from the 50-day moving average. So this is a market that has come a long way. It can go higher in the short term, but I believe that in all probability we're going to get a pullback fairly soon. And all it takes is a headline like this. Do not kill your protesters. Trump warns Iran as crackdown on growing protests begins. This type of saber rattling we can expect to continue if the price of oil continues to drop. They need to keep a bid under the price of a barrel of oil because of the fracking sector here in the United States. Far too important for re-election to let the price per barrel of oil to decline. So continued saber rattling. When I first read this earlier today, I became nervous about another run at some sort of saber rattling in the Middle East, and that'll put pressure on stocks. And this, a threat of war, when you add that on top of the fact that valuations are at all-time highs, and when you're looking at a stock market which is historically extended relative to its 50-day moving or 50-period moving average on a weekly basis, you have a recipe for disaster, a sharp pullback. So we need to be open-minded about, yes, valuations are there. They're out there. They're very, very expensive, but the markets will ignore it, especially if you get decent earnings this coming earnings session. If, however, we start to get saber rattling, or if we get really poor forward-looking guidance out of these companies, then we have a different story on our hands, and that'll set us up for a big sell-off in the market. But at current, yes, Friday was a bearish day. We may get a pullback. It's not being implied in the future session tonight, but we'll keep an open mind and just keep tight stops. And with that, I am going to say good night to everybody. And I'll ask you too, if you can hit that like button again, I'd really appreciate it. And subscribe to the channel. And everybody have a very, very profitable trading week. Members, I'll send you out a link to the Members Inner Circle, and we'll start that 7 p.m. Eastern Standard Time. Check your inbox. Everybody have a great week, and I'll talk to you soon. Be well.